And we're live. Content provided the advantage for general information only, not intended to provide specific advice or recommendations for any individual. Any performance references historical and no guarantee of future results. All indices are unmanaged, may not be invested into directly, and economic forecasts set forth during the event may not develop as predicted. There can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial, do not represent the views of LPL Financial. Securities are offered through LPL Financial, member of FINRA and SIPC, and investment advice offered through Gimbal Financial, a registered investment advisor and separate entity from LPL Financial.
Welcome.
Happy Friday.
Welcome. I have my own disclaimer I was going to work on here. I was visiting with a client down in Nashville, Indiana. I wanted to see the leaves change this week, and they haven't changed yet. I don't know why that is. Somebody probably more science experience than me, but I saw this warning this week, and I thought it fit with our disclaimers, and I thought it was pretty comical. Do not sit on benches, not designed to sit on. That sounds like a disclaimer we need to. and so the cynic that I am, I would say that the very definition of a bench is something you sit on, so that I would market those as something other than benches then. So what other warnings you guys have for us?
Warning.
Yeah.
Like buyer beware.
Well, Amanda just read all the disclaimers. You can, she was having a little brain fog today compared to usual.
Yeah. Yes.
I can't think of any other warnings.
I
think, I don't know if it's my personality, but I just don't like warnings.
It's just a funny thing, you know, how we rode around in the back of pickup trucks when I was a kid. We had lawn darts that actually had points on the end of them. One of the little shops in Brown County had a kid's bow and arrow.
Oh yeah. And
the arrows had these round balls about the size of racquetballs on the end of them. And I just you know, when I was a kid, we got hurt and learned not to do certain things, and trying to avoid all pain, I think, leads to greater pain later. That's
what we talked about last week.
Yeah.
Taking risks and things. No, there's calculated risks,
right,
and there's, you know, foolish risks, but you know, there's warnings for a reason. But we've been blessed with a good conscience, and we can think about things. We can see what little brother has done and then not repeat the course.
Yeah. Like for me, I literally can't ride a motorcycle because I saw my brother plow one through a fence when I was probably 7 years old. So that's why I don't ride motorcycles. No other reason. Well, yeah, there are, but that was the primary reason. And so you learn things. You know, my brother even bought a motorcycle, so it didn't scar him that much, but it scarred me more than him. Well, what's going on in the free world that we need to share with our friends and discuss?
Eric's got something good. We were talking about it a couple minutes ago. He's got something really good. I like it.
Yeah, so I read a post today, and it was, if you would have bought an electric car, you know, 8-9 years ago for, you know, call it $70,000 to $80,000, you know, that car depreciation would have hit pretty well. What was that?
That's a premium car right there.
Yeah. You know, the depreciation.
I think if you took all my cars and added them up, that would be 70,000, and that's including all the
I'm pretty
bangers.
sure my first house, which really wasn't that long ago, was almost 70,000.
I'm sorry, Eric. We digress.
We digress all the time.
Oh no, you're good. So you know, that car depreciation would have hit pretty significantly, and that car would probably be valued about half now. But if you would have invested that price of that car into, you know, an electric vehicle stock, you know, it could have had a significant value of increase. And this post was saying over $7 million. And that's just pretty crazy to think of how much money you could have invested for a short period of time in the growth potential.
Doug, why didn't you do that in my account?
You know, in my luck, I would have invested it I would have invested it in the other car company that nobody has heard of because they've been out of business for 10 years.
Is that the Yugo?
Yes, I would have invested it in Yugo, and that 77,000 would be worth a great story. And that's it.
Yeah. Well, I think that's a great example, Eric, of why one of the reasons why we do what we do, like the possibilities of optimism, creativity, ingenuity, and free enterprise in America. Like you don't hear, it's not a Russian named company, right?
Right. And then think about this. Like, let's say you were one of those persons who spent the 77 on the flagship car. If you're driving that thing around, I bet you're thinking, you know what, I should own some of this stuff. And it may have sparked some ownership, even though you bought the car. I mean, so that's the thing about capitalism is you can participate.
Eric, how about a homework assignment for you?
Okay.
What is the greatest valued company in two places, Cuba and Russia? Let's talk about that next week.
Okay.
Yeah. Yeah. My point is that
stay tuned.
Yeah, my point is that freedom has benefits that socialistic ideas don't necessarily bring. So let's see what Eric comes up with next week. So, all right, Eric, we'll turn you into a guest, and we'll let Amanda tell us what we need to know here. Maybe.
No, I know very little this morning.
I got something. You got
All right.
something, Amanda?
Doug,
Nope,
you
go
go.
for it.
Okay. So we are in earnings seasons right now. And earnings season happens, 4 times a year? And earnings season is a time when companies, publicly traded companies, come out and they disclose what their earnings were for that quarter, where they are year to date. And these earnings numbers are a big deal. They're a big deal to the stock market because there's forecasters, there's analysts who for weeks, months, year have been working on these numbers. And they've said, this is what we think XYZ company is going to earn this quarter. And when XYZ company does or doesn't earn whatever the analyst forecasted, there's either a missed expectation or there's a huge, well, there's a missed expectation, maybe either way, up or down. Let's put it that way. If the missed expectation is wrong on the upside, stocks can do well. If it's wrong on the downside, normally get punished. Sometimes you could have an expectation that was a winner, and then a forecast that says, yeah, we did well this quarter, but next quarter is not so good, or next year is not so good. And this is just a real volatile time to be an investor. There's no guarantees any day in the stock market, but during earnings season, it's pretty unpredictable. And there's this bicycle company out there that you can pedal in your living room, and
Let's go to that.
they did not do so well. Yeah, normally on a bicycle, it's really fun to ride a bike downhill. But if you're owning the stock, that looks like a down. That's the type of, you don't want to be on that slope.
Yeah, so this is historical data. So we're not making a recommendation, but this bicycle company is called Peloton. And they came out with earnings that were disappointing. They lost money, it looks like. And so the stock closed yesterday at about $86 a share. And you can buy all that you want right now, less than $60 a share. And that's significant loss of capital there.
As an investor, if you go back, Keith, you'll see on the chart, you go back several weeks and even into September, it started to trade below its moving averages. And that's just a shot across the bow. We talk about that all the time on here, supply and demand and price action.
I'll go back to that and just point that out to y'all. It actually gave you some advance warning long before that. It started topping out over here in January and broke through. We talked about the red line being the 50-day moving average. It broke through that on the downside on big volume over here And then it tried to maintain on the 200-day average and then fell below it. And then here it is, it could never get back above it. And today it's going to be a long time before it touches that. I'm not predicting, I'm just saying, if you look historically, it's going to take it a day or two to get back to where it once was. And so
this is earnings season. And so if you would have owned that stock or any other stocks 2 days before, or any other indice 2 days before, you might have thought a little bit differently about your ownership then versus today. So earnings season, it's the way I break it down. It's like this. If I tell my wife, hey, I'm going to be home at 5 o'clock, I'm going to be home at 5 o'clock tonight, and I get home at 6, probably not good. If I get home at 4:30, hey, what are you doing home so early? Good. And so it's just all about exceeding expectations. But then the big thing is the reaction to what happened. It's not necessarily the data, but the reaction to what happened. And all that is in the hands of buyers and sellers, just like you and just like us.
Yeah, and here's an example of a stock we tried to put in some client accounts, and so we tried to put it in over here, right around this level, and it looked like we made a good decision until we got over to this level over here, and we decided it's not doing what we expected. It disappointed our expectations, and we got out of this thing. And we can buy it a lot cheaper now if we wanted to, but again, it's not acting properly with regards to those moving averages. And so the reality of things is my expectations in any investment I buy or invest in clients' accounts doesn't mean that's the correct investment. The markets will tell us what to do. And I wrote down a quote I saw this week. It's not the news, but it's the reaction to it that drives those stock prices. And so a lot of stocks, I think, out there today have got ahead of themselves. Some of the big name stocks that are traditionally held by big company or in the mutual funds and investment companies. But the temptation is to get your emotions all ramped up and jump in on these things after they've had a big run up. And that can be a really risky situation.
Yeah. And, if we could switch over, can we switch to the Russell 2000? Is there a way we can see that on the charts? This is an index, and it's small and medium sized companies. And so we're all pretty familiar with the big companies. The big companies, the household names, the electric car company that we talked about earlier, or something that you use for your phone or home computing. All those big company names have really been leading the stock market for several years now. But some of these smaller companies, like inside the Russell, these types of companies are starting to look good, and they're starting to break out. You can see, Keith will point it out here in a second. You can see that we broke above a high that was set. Was that back in March, Keith? Is that right? Or maybe back in January?
June, it hit it. Well, here's the high over here in February, March. Tried to get up to it in this red line I drew here. But what happened is we've been talking about this last couple of weeks, and that we were watching this to see if it could get above this threshold, and it did it on the 3rd, where we kind of had high volume coming into that index, and temporary line pin here, and so it did it on this day right here. They had this action in this index, and so it suggests that maybe that's a good place to watch for some future gains in the market. There's no guarantees in any strategy or any idea, but that's one of the things we're looking at. And let me maybe shift gears on us for a second and kind of let me get rid of this shared screen here real quick. But we listened to Brian Westbury with First Trust. So we trust his economic views. I think about as well as anybody that I can think of right now.
Yeah, I think so. He's pretty awesome. He can communicate. He can take something very complex and break it down.
Yeah, and he biases his political point towards, I think, what are they called?
Capitalism?
No, it's a
Libertarian.
Libertarian. That's what I was looking for. Thank you, Amanda. So I think the libertarians generally think that just leave every decision to the individuals rather than to the government. And I don't know, maybe that's my bias. I think individuals can make a lot of good decisions. They can make bad ones, but that's part of what we were talking about, why you don't want to jump off a cliff or something, that everybody's gonna make bad decisions and you can't regulate stupidity. So there you have it. So, but anyway, why the Russell 2000 probably makes sense is Brian put this article out Monday, The Eyes on the Fed. And one sentence says, inflation is clearly a problem. And I've seen several news releases, you know, if you're trying to get a rental car, that's some of the highest inflation we've seen. But there's a lot of places where inflation is working into it. You and I think you met with me one time with Ken Moore down in Louisville. And I don't know if you were in that meeting or not, but he asked us which would we prefer, inflation or deflation?
I remember that.
Yeah, and the answer to the question is neither, because what you prefer is a steady, constant fiscal policy rather than one that's, you know, deflation would be the depression of the 1930s, right? Inflation would be Venezuela or something like that. So you don't really
The
want
extremes on either one.
yeah, no. And so that was a thought-provoking conversation. Well, I don't think we're going towards hyperinflation, but the consumer price index, that's the measure of the cost of a variety of expenditures you'd spend money on, is up 5.4% over the last year. The Fed funds rate is the rate that the federal funds lends money to the member banks. And what Westbury was pointing out, that the real rate of that right now with a 5.4% inflation rate is minus 5.4%.
Okay.
You're losing 5.4% on money right now with inflation. And so it only takes 20 years at that before you've lost all your value from inflation. And so that is not a healthy idea to have that kind of inflation. We haven't seen that in a long, long time. Maybe I didn't look to see when that was, but it probably would have been in the 90s. Maybe I can't remember any time this century that we've had 5% inflation. You see it at the gas pump, you see it at the grocery store, and it'll manifest itself in a lot of different ways.
You don't see it in your savings account.
No. And it's really a tax on, I think it's a tax on us senior citizens. I guess I can say that since I crossed over that.
You're always
60.
talking. You're either a Gen X one day or you're a senior citizen today. I mean,
It
what's
just-
going on?
It depends on if I can get the discount at the restaurant. Yeah, so M2, I hate to get technical, but the measurement of the money that we have in the system, M2 measures what actually hits the economy. And since February of 2020, the amount of real money that's hit the economy since then is up 36%. And so you've got a shortage of goods from the supply chain disruption that our government set us up in. And you've got an abundance of money chasing that short supply. And that's basically adding fuel to the fire of costs of things. And so it really, I think in the decision grid for people, it makes it hard because your perception of what something should cost is not going to match with what they are cost. So do you buy a house in this economy? Do you buy a car? Because they should have cost 30% less or whatever, and now they're costing 30% more. And so anyway, all that to go back to what Doug was saying about the Russell 2000, historically, those smaller companies have done better during inflationary times, which we haven't seen in a long, long time. We can't guarantee they're going to do better, but that is what has happened over time.
Yeah, and so I think it's a good time to take a look at, especially if you're employed and you have a 401k, it's a good time to take a look at your allocation, your mix of investments, and just see what you own in there, know what you own in there. Because with this data, things are changing. And when we showed you the Russell 2000 index, some of those companies, they may be some of the leaders. And you've heard of some of these companies too. It's not like they're so small that you don't know them. I mean, one of them is my wife's favorite tennis shoes that she likes to run in. And so they have big cushion on them.
No,
Do you know what those are?
no, but I know I like Converse, but I think they've
Hocus.
Yeah,
Yeah,
Converse had finally come back in after the 1970s.
I think I'm pronouncing that right. If it's Hoka, but anyway, yeah, the smaller companies are starting to look interesting, and we think that in rising inflation environment, those smaller companies might be able to pivot. They might be able to move a little bit quicker. They also, the wrong ones, will get punished harder. And so now is a great time to just look at actively managed accounts and see where your risks are.
And I would be so bold to suggest that a fool and his money are soon parted. I don't know if you've ever heard that quote, but the DIY do-it-yourself mentality has been what's been propagated, that you don't need financial advisors.
It's been good. I mean,
Yeah.
the last 10 years,
Yeah,
it's been good.
yeah. And so I wouldn't even encourage you to look at your 401k yourself. I would try to find somebody with some wisdom and some advice to help you think through your 401k, because I think what most people do is they pull up, if this was my 401k and it had all the past
It's what
performance.
I used to do.
Yeah.
When I first started, I did the same thing.
Yeah, it had all the past performance. And so the smart thing to do was to find the one with the highest number, and then I put all my money there.
Even though it's screaming past performance doesn't equal.
Yeah, I'm
results.
sure.
That's like,
It probably says
just-
that on this thing.
that's just some silly.
Yeah.
warning.
Yeah. So there was, well, I have looked at some of those things where some of these small company funds have been really well. They may be up 40% this year, which they are not probably going to do that next year. And past performance does not indicate anything about tomorrow. However, you probably need to do a review, because what happens if you've been putting money in a 401k for a decade and that's how you've been managing it, it's worked pretty well for you, because you started with little or nothing and now you've got this bucket of money.
If you've done that, we are excited for you. That's just cool.
Yeah, but I would not suspect that's always going to work well. It might.
Right.
Historically, going back over 100 years, it hasn't worked well. Going back the last 30 years, it's done all right.
Yeah.
Yeah. So if you had done that in, say, 2000 or 2003 and started taking distributions, that probably didn't work out well
Yeah.
for you.
If you were retired or you're starting to live off your money and you're living your dream, yeah, wouldn't have worked well.
What about just some news ideas? What about 150-mile-an-hour autonomous car?
I like that. I like that.
Did you hear that happen?
No, but I like that speed. 150. That's pretty good.
150 without a driver.
I think. Ooh, was that at the Indianapolis Motor
Yeah,
Speedway?
yeah,
I did hear about that.
yeah.
I
How
saw
about-
pictures of it.
yeah, that didn't happen in Russia or Cuba. Okay, I'm just saying that was the United States of America in Indianapolis, Indiana.
Right on.
So they did that. I think Purdue was involved with that. They did that to help people get over the anxiety of not having the steering wheel.
Yeah, just yesterday, my son, we were watching a football game, the Colts, and one of those GMC commercials came on where they like do this, and they're driving the truck, changing lanes, and he said, "Dad, would you ever trust a truck to do that?" I said, "Yeah, I think I would." And he said, "Would you trust it instantly?" And it might take a few miles, but it's so cool, the technology out there.
Well,
It's just getting better.
I don't want to offend any of our viewers,
But
but I think if I ever were to move to Florida, for which I don't anticipate, there's a demographic subset of Florida.
hey, you gotta be careful in the Publix parking lots. That's where you're going?
I'm just saying, if I were going to trust the drivers that drive like this, or an autonomous car, say 10 years from now, I'm probably going with the autonomous car.
I think it's going to be sweet. And I love to drive, and I love the sound of a gas-powered high-performance engine. I love all that. I think the future's looking good.
Have you ever seen the cars going on the roads in Cuba?
I think you need to make a trip to Cuba. You got
I think
Cuba on your mind.
I think they're
You need to at least go
nice.
get a Cuban sandwich today.
I'm just jabbing socialism anytime I can.
Hey, that Cuban sandwich, though, I don't know if that came from socialism or not.
Probably, I
That
think
is one of the winners.
I think it predated. I think it's pre-Castro. You guys can go look that. Where's Eric? Let's have him look that up for us. I'm sorry. Then now I'm curious. Captain Kirk. What about Captain Kirk, Amanda? Do you know that?
Is that like
I need a refresher.
it's like Star Trek stuff?
Yeah.
I don't know.
Yeah. I apologize that I'm so late on the news on this. I wonder if this is what I wonder, if the federal government is going to see whether or not Captain Kirk received a transfer of wealth through the gift from the folks that did the rocket ship that he rode in. Did you see that he went up in space?
Did he go?
Bill Shatner, 90 years old, the oldest person to go in
Where did
space.
he go?
Blue, what's it called? What?
Did he go up with Jeff Bezos?
Yeah, yeah. And
Musk spaceship looks cooler.
they tried to sell that.
Just saying.
They tried to sell that seat to Tom Hanks. You know how much they tried to sell that for, Amanda?
Buzz
Wouldn't even
Lightyear. They tried to sell it to Buzz Lightyear.
To infinity and beyond.
That's not Tom Hanks. That's Tim Allen.
Oh yeah.
Yeah, sorry.
Yeah.
So they tried to sell the seat.
They tried to sell that seat to Tom Hanks for $28 million. And they gave it to Bill Shatner. There's a transfer of wealth there.
There was a value.
They gave to him for free.
Ooh, bummer.
Do we have any IRS
Well, I'll put it
agents
this
watching
way.
this?
He better do his lifetime gift this year.
I thought that he paid the real money because Shatner's got to be loaded. That dude is one of the savviest businessmen. Like he's done everything. But anyway,
That's interesting.
He said it changed his life.
So it may have been worth it.
Well, I heard that he said he invented all these things that we're excited about now because they were all in Star Trek 30 or 40 years ago. Yeah. So anyway, that was a crazy stuff is going on, and you can get focused on the negative stuff, or you can just watch what's really productively going on in the world. And it's an exciting time to be alive, I think.
It's way more fun to be an optimist. Now, during the COVID, I did adopt a new mantra where I was looking to be an opportunistic person, opportunist instead of an optimist, because sometimes an optimist can have a little too much caffeine.
That's good.
So thinking opportunistically is a pretty good way to go too.
Well, in the land of opportunity is actually where the Cuban sandwich came to be. It originated in Florida.
Good. Nice work. Man,
Eric and I are tag teaming that live right now. And Cuban immigrants started it in either Tampa, Florida, or Key West. So
go USA.
Man, I'm flying into Tampa this weekend. I'm going to have to grab me a Cuban sandwich.
No more coffee for Keith.
But Cuban coffees, that's really good. Let's see where that actually originated. That's some good stuff too.
I'm not a cigar smoker, so I can't even speak to the
Cuban Cuban coffee.
No, I was going with their
okay, we're still on theme.
Yeah, I'm past that, Amanda. I'm on the COVID tracker.
How are we doing on the COVID tracker?
COVID's dropping off. People are still anxious. I don't know. Honestly, we had this conversation a year ago, what's going to cause people to lose their anxiety. One of the data points I saw a couple of weeks ago said that those who have been vaccinated that are more anxious tend to actually be more anxious of having a breakthrough case than even the non-vaccinated people. And so the vaccine is clearly not clearing out people's anxiety levels. And so I don't really know what to do to help those people other than start watching this show. We'll give you some data, give you some uplifting ideas, and encourage it to move forward. But I was looking at this week's, and you know how many total people, I'm assuming this US, total COVID-19 related deaths there have been for people under 17, probably less than 1,000.
Yeah.
And it's probably less than 500 if the truth be known. So the data is just, the children aren't at risk. The children are still masked up. It's one of the data points from the CDC says 42% of the children ages 5 through 11 are estimated to have been infected with COVID by June of 2021. And so
I never knew it either.
I don't even know. I'm going to Gimbal employees. We're at like 80% infected so far. And so I would guess the infection rate has just, and we could be 100%. The one that hasn't had it probably has and didn't even know it. So the infection rate, Ryan Westbury on his Twitter feed, I've seen him put it every day on there for last week, natural immunity. And whether or not you get the vaccine or not, once you've had it, your natural immunity clearly goes up. So I encourage you guys to smile, enjoy the day, go get some Cuban coffee or Cuban cigar or Cuban sandwich, whatever it is for you, and enjoy the beauty and the splendor of this fall and enjoy being in America.
Hey, thanks for tuning in. Thanks for doing business with us too. See you next week.
All right. See you guys.